Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, I just got done playing pickleball and had some dinner and showered, and it's a little after 12 o'clock. So I want to make this brief. I will attach my last uh, suggestion YouTube video on I am shorting the 20-year treasury again. I'm back on that. As I mentioned, I would be if certain things happen. So with that, let's get into it. So this is a long-term chart of the 30-year treasury yield. So this is truly the long bond. And if you can imagine this bullish channel, bearish channel actually, meaning that rates were going down all this time, you could take this chart back to 1980 because back in the 70s we had real high interest rates. Like you could get a CD for 10% with no risk, but inflation was sky high. And ever since then, they've worked at the Fed has manipulated things to keep rates going lower. And that has, of course, done well for stocks. But starting in 2020, all of a sudden, yields shot out of a cannon. And I mean, look at this. They went from, what is it, less than 1% on the 30-year treasury yield up to 5.25%. I mean, that is a huge move. If you think of anybody that has that out there, whether it's your mortgage or your whatever it is, if you're like me, I'm refinancing my mortgage because my fixed rate of 10 years is going to be up in a year. I'm going to refinance it now, even at a higher rate than what I had, because I want to protect myself. I think the potential here is for rates to go like really high, which would really disrupt a lot of things. So, if you're a leveraged person with a lot of things on credit, you want to be really careful here. So, having said that, yields in 2020 went from 1% to 5.5%. That's obviously a change of trend from a, really 25-year trend of lower rates. Um, and so we've had a consolidation after the initial thrust up, and now we've consolidated sideways. And so I think this is a good time to start shorting treasuries again before the next leg up in yields and prices go down. So if prices go down and yields go up, and I'm shorting that, I'm going to make money on when bond prices go down and yields go up. Okay, so this is just the point and figure chart. This is just the least subjective chart you can have. It's just supply and demand. And you can see starting in 2020, actually, it was probably 2022 that we went from a bearish trend line saying the trend was down to now a trend is up. And this is the short 20-year ETF TBF. So this is saying the short is going up and bond prices are going down and yields are going up. So, I remember, and I want to say it was 1994 when everybody, when they think they put money in bonds, it's safe, but bond funds and bond portfolios were down 20-25% in 1 year. So if you got stocks that don't do well, and then you got bonds that don't do well, and people that live on their income, and they, it's a, it's not a very settling experience to see your bond portfolio down from, let's say, $1 million to 750,000 when that's all you got to live on, or 100,000 down to 75,000. So anyway, that's the point and figure chart. It's saying that rates are going higher and shorting bonds is going to be profitable. And here's the short term part of that. So here we have, see this dotted line here. I thought we had an inverse head and shoulders, a bullish inverse head and shoulders pattern, like a man or woman hanging upside down. We got the shoulder, we got the head to this dotted line, and then the right shoulder. And we had kind of a fake breakout, which I bid on. And then we went down and I bid on it again. So I don't like buying when things are up. So if things are up, I'm only going to buy a quarter to 0.5% of what I want to own. But then I bid heavier a couple days later, and then I got stopped out with like a 1.5% loss. And now it's jumped back around. So we had this whole convergence of moving averages where prices were coming back, and that's normally a type 2 convergence. And that was a great setup for a springboard higher. And the bond market had other ideas. So we broke that. I got stopped out, and now we're up here. So now it looks like I need to redraw that neckline from a downward slanting neckline to a horizontal trend line. And now we have a new right shoulder. Have to do that sometimes. This isn't foolproof for everybody to be doing it, right? So it looks like the right shoulder may be completing. And if so, this should really take off. So what I did after getting stopped out here, 1.5% lower, is I put a half a position on today. So I chased, which is not me. I don't like buying when things are up, but I do want to be in this. And so I bought half. So if we get a pullback tomorrow, what I'm going to do is I'm going to buy my other half. And then if it breaks down and breaks again, I'm going to sell it and probably say a bad word. But that's kind of where we're at right now. And I think the potential here is for really big, big gains and something that you can have outside of your regular stock portfolio that could be profitable. You also get the dividend of the 20-year treasury, which is, I don't know, 3.5% or so. So that's great. And I have very little in fixed income now. I have a small amount in 2-year treasuries, the 1 to 3 year treasury ETF, SHY. And then the rest of my money on fixed income is in T-bill, TBIL, which I've talked about, which is a 1 to 3 month, which has very little volatility in your principal. And I probably have 50% of my portfolio in that. I just get a dividend at the end of the month, so it's going to show up in my account probably tomorrow. But yeah, so I think the potential here is really big, and I want to get back on that, and I want to let you know about it because I know you're not hearing about that anywhere else. And thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends, neighbors, and family. Have a great evening, and we'll see what happens tomorrow. Adios.